Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysterious world of corporate finance. And let me tell you, this Federal Home Loan Bank of Dallas filing is going to be a bit different. We're usually looking at profits and losses, but today we get to peek behind the curtain at how they fund their operations by issuing debt like bonds. Think of it as how they borrow money to get things done, but on a very large scale. So what we have here is what's called a Form 8K, which is basically a report that companies file when specific important things happen that they need to tell the public about right away. In this case, it's all about the money they're planning to borrow. The Federal Home Loan Bank of Dallas, or FHLB Dallas as we'll call them, gets most of its money to operate by selling these things called consolidated obligations. Fancy name, right? But really it just means they're issuing bonds and discount notes. These are essentially IOUs, promises to pay back borrowed money with interest. It's important to know these aren't backed by the US government, so the creditworthiness of the federal home loan banks themselves is what matters here. Now, the real meat of this report is in something called Schedule A. This is where they lay out the specific bonds they've committed to issue. Think of it as a list of borrowing plans. They tell us when the deal is expected to happen, when the money is due back, and what kind of interest they'll be paying. Let's take a look at the first entry here. On August 14th, 2025, they plan to issue a bond that matures on August 18th, 2028. That's a little over 3 years. The interest rate on this one is 4.375%. They're not paying that out every year though. The next interest payment or coupon payment is scheduled for February 18th, 2026. And the total amount they're borrowing with this specific bond, a cool $50 million. This bond also has something called optional principal redemption and a Bermudan call style. What does that mean in plain English? Well, it means the bank has the option to pay back a portion of the loan early on certain dates before it's fully due. Bermudan style means they can do this on specific recurring dates, not just any time. This is a common way for big borrowers to manage their interest costs if rates go down. Moving to the next one, dated August 15th, 2025. This bond matures on November 28th, 2028, so a little over 3 years as well. The interest rate here is 4.320%. Again, they have the option to redeem the principal early on specific dates, and it's a fixed rate. This issuance is for $15 million. It's a smaller chunk of their overall funding strategy. While these are important details about their borrowing, it's crucial to understand what they don't tell us directly in the schedule. The report points out that these numbers don't include any of their other financial tools like interest rate swap agreements. These are complex financial instruments that companies use to manage risk, especially with interest rates. For example, if you have a bond with a fixed interest rate and market rates fall, you might want to lock in that lower rate for your borrowings. Or if you have debt tied to a variable rate and rates are expected to rise, you might use a swap to convert it to a fixed rate. These are super important for managing their overall financial health and profitability, but they're not detailed here. Also, the par amount, which is pretty much the face value of the bond, like the 50 million we saw, might not be exactly what shows up in their main financial statements. That's because when they sell these bonds, they might sell them at a discount or a premium, meaning for less or more than the face value. Plus those hedging adjustments we just talked about can change the reported value. So while these are the dollars being borrowed, the actual accounting value can be a bit more nuanced. And one more thing to keep in mind, this schedule only covers bonds where the Federal Home Loan Bank of Dallas is the main borrower. They might issue bonds for other Federal Home Loan Banks, but those aren't listed here. This gives you a snapshot of their own borrowing activity, but it's not the complete picture of all the money moving through the Federal Home Loan Bank system as a whole. Finally, the report is signed off by Sue Cassidy, who holds the title of Vice President and Director of Financial Reporting. This is a standard part of these filings, giving a name to the person responsible for ensuring the accuracy of this information. So what's my take on all this? Well, the Federal Home Loan Bank of Dallas is essentially issuing debt to fund its operations. These are significant amounts of money, and the interest rates are a reflection of the market and the perceived risk of the FHLB system. The fact that they have options to redeem their bonds early suggests they're actively managing their interest expenses, which is a good sign of financial prudence. However, as the report itself notes, this only tells part of the story, without seeing how these borrowings are matched with their assets and without understanding their hedging strategies. It's hard to gauge the full picture of their financial health and their ability to manage interest rate fluctuations. It's like seeing someone buy a bunch of lumber but not knowing what they plan to build with it or if they have a contractor lined up. Looking broadly, the FHLB system plays a crucial role in providing liquidity to housing finance markets. Their ability to access capital markets effectively, as evidenced by these bond issuances, is vital for that role. The risks here would likely revolve around changes in interest rates, market demand for their debt, and the overall economic climate that affects housing. Overall, this filing is a transparent look into a key aspect of how this institution funds itself. It's less about day-to-day operational performance and more about their capital raising strategy. It shows they are actively managing their debt, but for a deeper understanding, you'd need to look at their broader financial statements and their strategies for matching assets and liabilities. Alright, that's our dive into the Federal Home Loan Bank of Dallas's latest filing. What do you think about how they fund their operations? Let me know your thoughts in the comments below. If you found this breakdown helpful, give it a thumbs up and subscribe for more corporate deep dives. And hey, if you want to chat more about these filings or anything finance related, join our Discord community. The link is in the description. Thanks for watching, and until next time.